Revolve Renewable Power is a developer and operator of wind, solar, hydro, battery storage projects in the US, Canada, and Mexico. We've got Executive Chair Steve Dalton and CEO Myke here to discuss the company's recent developments and its outlook for the coming 12 months. It's Wednesday, April the 9th. I'm Martin Gagel with Market Radius Research. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Hey guys, thanks for joining us. You've been busy with a flurry of recent news releases, and I appreciate you joining us here to give us a bit of context and insight into your operations, as well as into the current market conditions and environment. So how are things going?
Yeah, well, great. Thanks a lot, Martin. Great to be here again and join you. As you noted, we have just put out a couple of different releases around the sort of updates and developments over the first quarter of the year. So first 3 months have been pretty strong progress for us on quite a few different fronts. We signed a binding letter for an acquisition. We've accelerated our utility scale project development pipeline. We've expanded our distributed generation pipeline as well. So a lot of sort of high-level progress over the course of the first 3 months. And interestingly as well, some specific developments in Mexico where we saw some improved regulations being brought into law with the recent government change, which is actually helping us to accelerate some of the development on two of the late-stage utility projects we see in Mexico. They total about 531 megawatts. So very large late-stage projects that are now advancing a little bit quicker than we had thought previously, based on that change in regulations. We're still seeing good, strong progress on the utility scale projects in the US, the late-stage projects in the US. And then here in Canada and Alberta, we have a project that's just about to be submitted into the Alberta Utilities Commission permitting process, which is really the key permitting process. So again, that project in Alberta looking to be ready to build by the end of this year. So quite a few different highlights over the first 3 months of the year that have contributed to increasing recurring revenue, increasing projects under development on the distributed generation side, and again, strong progress on the utility scale projects, which are getting closer and closer to that ready to build state later this year.
And a couple of just points on the ready to build state. That is a significant milestone and de-risking event when you get to there. And then that creates a lot of value once you hit to that. Can you clarify that?
Yeah, absolutely. I mean, other than construction risk, once you're past that ready to build stage, there isn't significant risk. So you've got all the permits in place that you need. Essentially, you've got, likely a power purchase agreement. So you have someone to buy the electricity. You have the interconnection in place as well. So you have all the pieces of the puzzle, and basically hitting that ready to build stage is essentially putting all those pieces together and saying, look, here's what we've got. Here's when it's going to get built, and away you go. So yeah, it definitely de-risks the projects, and it means the projects are moving forward without a doubt.
And then as well, I don't think people appreciate the interconnection agreements. Those are pretty significant milestones, as well as utilities are overwhelmed, I believe, with a lot of people trying to connect into the grid, and they got to make sure they can handle all the power and all that. So you're getting closer on that, and those are I just want to highlight that people should appreciate those are pretty major milestones themselves. They seem kind of minor, but they're pretty significant.
They're huge. Maybe you want to touch on that, Steve, in terms of some of our work, not just in Mexico, but in the US as well, how long it takes and, the progress that we've made.
Yeah, sure. I mean, at one point that kind of struck me, Martin, as you were asking the question there, and I think the bit that kind of isn't to be forgotten about is like the reality is that as you move through all those development phases, you're actually creating value. For us, ready to build is a super important one for our kind of develop and hold kind of model, which, the project that Myke mentioned in Alberta, we've got a couple in the US where we want to actually construct down and operate those over the long term. But if you look back to deals that we've done, be it, the wind project that we sold to Enel back in Mexico a good while back, or the deal we done with Engie, we actually sold those projects at kind of mid-stage development where they were still obviously a number of years away from ready to build, but we were still able to lock in value through those transactions and obviously then get milestones as you kind of continue the development. So, as soon as you kind of find a site which, passes your fatal flaw analysis and you start, signing land, starting interconnection, starting your environmental permitting, you're continuously, creating value. it's kind of maybe hard for investors to appreciate because it doesn't really show up in our balance sheet as such, you know. But transactions like we've done in the past, and at this stage, you know, we can probably point to at least 4 projects we sold, you know, where you can kind of see the hard numbers behind what it actually means for shareholders. You know, there's actually quite a lot of value behind that. Back to the point around specifically around interconnection. I mean, if you look at where we are on our portfolio, you've got effectively 2 projects, Vernal and Primus, who have interconnection agreements, you know, fully signed all the way through the process. You've got a couple of projects in Mexico, which are, you know, going through the process at the moment. Obviously, the project in Alberta, we submitted interconnection back last October, so we're in the cluster process there with the ISO up in Alberta. So, you know, we've got a number of projects which are either, you know, fully through the interconnection process or already going through it. You know, and it's back to that point of de-risking, creating value. You know, we're in the midst of it on a number of these projects.
All right. You also announced an acquisition, which seems fairly major. This is a fully operational power dollar producing project that you just or you're in the process of acquiring. Can you clarify that?
Yeah, maybe I can kind of give a bit of background to it, Martin. And again, I kind of like to step back for, you know, why are we doing acquisitions like this? And I think I've been on with you probably, you know, I don't know, a good few times talking about some of these deals over the years.
Yeah.
But, you know, in terms of our overall strategy, which is, you know, you have to look at acquisitions like this through that lens. You know, we have a kind of development model that we've, you know, successfully, you know, implemented over, you know, 10, 12-year period. Like I mentioned, we've sold a number of projects, created a lot of value for our shareholders, got a lot of cash in the business. You know, as we moved into being a public company, you know, one of the kind of key things we were very focused on doing was, you know, supporting that development model by, you know, diversifying into that kind of more recurring long-term cash, being more of an owner operator. And this acquisition was just another kind of leg of that strategy that we've kind of working pretty hard on for the last 3 years. So, you know, up until now, we've done, you know, 3 acquisitions effectively. If you look at the Centrica acquisition, which we've done in 2022, you know, and some of this is maybe just to emphasize the track record for investors and people listening in. You know, we bought the Centrica business for 1.4 million. We just announced one of the things Myke mentioned was we sold only 1 project out of that portfolio in the last couple of months for 1.5 million. So basically covered the full cost of that acquisition. We're still left with a residual portfolio of projects generating electricity and revenue for the next 10 years. In terms of our Wind River acquisition, which was the big one that we done this time last year in Canada, you know, it was a $4 million acquisition. We financed it with our partner Rory Royalties. You know, we refinanced that deal, you know, within 12 months through the Van City loan that we announced back in January. You know, if you look through our numbers, you know, there's probably around 850,000-900,000 of fees and dividends we've already accrued from those projects only in 12 months. You know, and it's just to try and emphasize some of the value that we're seeing through some of these acquisitions. You know, so this one in particular in the US, you know, we've only been able to give a certain amount of detail around it because we're at the kind of binding offer stage. So still a bit of work to do in terms of getting the transaction done. But, you know, it's one that we're super excited about. It's the kind of next, I'd say, step up for us in terms of deal size. So slightly bigger than the last deal that we done. But again, it ticks a lot of those boxes. You know, it's an operating asset. You know, 20-year plus asset life, selling electricity to a regional utility, you know, gives us exposure to the US power markets, which, you know, extremely exciting. If you look at our development or our operating portfolio at the moment, it kind of, again, fills in, you know, a key part of that jigsaw where we have some Canadian operating assets. We have some Mexican operating assets now. We have some, we'll hopefully have when we close the deal, we'll have some operating assets in the US market. You know, and the other thing to kind of think about it in terms of these transactions, and I think particularly for a company like us, you know, scale matters and scale is important. You know, it gives you access to, you know, different funding, be it senior debt funding or different institutions in terms of who look at companies at a particular size. You know, so this acquisition on its own, you know, doubles our operating megawatts under management. You know, will add significantly to that kind of long-term recurring revenue base. And obviously that flows through to our EBITDA, you know, so there's a lot of really exciting things about the acquisition. And, you know, the other point I'd probably emphasize for investors as well is, you know, don't just think about maybe, you know, some of the numbers that we put out in that initial press release. You got to think about this as a 20-year plus project, you know, with exposure to hopefully increasing electricity prices in the US market. And, you know, I think as part of our overall strategy, what we've been able to find is, really interesting and attractive opportunities in those kind of markets. And, that's why I kind of touched on some of the previous deals that we've done. I think this one fits into that same bucket where, we see a lot of value for us on an asset basis, but then, when you combine that with our existing portfolio and scale and all those kind of things I mentioned, it's one that we're, really excited about overall.
All right. There are a lot of buyers or potential buyers, private equity, and all sorts of people who are interested in these type of assets. Why did you you say you're creating value from it? Why were they selling it? Why were you kind of the best bidder? And where can you kind of add the value delta, call it, to it, that where you're not just sort of paying the full value? How do we know that or how do you know that the value can get created with that?
Yeah, well, maybe I won't maybe go into too much detail of this specific deal, but I'll maybe give you a kind of a broader comment on what we're seeing generally as a trend across, let's say just the North American market anywhere, but particularly in the US and Canada. If you look at how the industry has developed, and I think look at how it's developed alongside capital markets and just utilities in general, the larger players who would have historically been the owners and operators or buyers of these projects are now looking at just much bigger opportunities. So the utility that used to maybe look at a 50 megawatt project, really, they're now looking at, it could even be potentially 200 megawatt project. And we saw a bit of that when we sold our Bouse assets. There was a 1 gigawatt project, a lot of interest from people. So what we're seeing in the market is, the traditional or historic buyers of some of these are looking at just much bigger opportunities. So they're not really looking at this scale of a project. And we feel, that opens up an opportunity in itself, and that, there may be a bit of a value delta between different sizes of projects just purely because of the size and, the different people that are in the market looking at it. I think the interesting thing for us is, when you add in, when you take that kind of delta maybe, and then you add it into what we're trying to do with our business in terms of scaling and, those things mentioned around, access to funding and, just overall kind of benefits you get from just being a bigger company, particularly, a bigger public company. That's where I'd say you would see some of those kind of added benefits to ourselves. And we haven't really mentioned too much around the actual specifics of the asset in terms of where it's located, but there are some kind of more strategic reasons as to why this project in particular is interesting in terms of our overall kind of market strategy for both the US and Canada. So there's a few different things hanging off us, but again, I'd probably go back to the track record piece. This is the third deal round. We've been able to find good deals, extract value beyond maybe the original kind of base case that we set out. And we feel that this is potentially another opportunity to do that for us. Subject to obviously getting it closed and everything else.
All right. Okay. That's great. And a lot of the value is created as more kind of, it's not like you're a bigger factory where you produce more widgets in an hour per, like it lowers that cost. It's more like your cost of capital, the whole corporate value of a bigger market cap, more assets to leverage, and that. Is that roughly where the greater efficiencies or value gets created?
Yeah, a bit of that. I mean, again, I kind of go back and reemphasize what's the overall strategy of the company. We're trying to give investors, access to, the higher returns from kind of that development model that we've shown, but, underpinned by a fairly solid base of long-term recurring revenue that, if you have an issue in a market, like, let's say if you go back a few years with Alberta, there was some regulatory uncertainty for a period. We've had it in Mexico. That doesn't mean your business stops, regardless of what tariffs anybody throws at anybody. Our projects still continue to generate hydro. They still continue to generate solar energy, and that recurring revenue continues. So, we feel it's a really key part of our strategy, being a public company, to provide that kind of underpinning of long-term recurring cash. This adds to that, in a pretty meaningful way. And then all those kind of knock-on impacts that you mentioned in terms of, cost of capital, access to capital, all those things are important. And, whether we like it or not, scale plays a part of that, the bigger you are, the more projects you have, the more revenue you're generating, the longer term that is, it's all, a lot more attractive, or be a lot more attractive. When you add it into the development piece of the business as well, that's when you kind of get those higher levels of return potentially from a portfolio effect. And that's really what we're kind of trying to offer.
We can't not talk about tariffs and how they could and could not impact you guys. So what is, how do they and do they not impact you?
Yeah, I mean, it's fair to say that, tariffs are something, the global tariff situation is something we're monitoring pretty closely on a daily basis, not just the impact on the broader markets, which I think is concerning for everyone and not just Revolve, but in terms of the actual product that we produce, what we build and own and operate. I would start by saying that, we are an operator. So the operating assets that we have in Canada, the operating assets that we have in Mexico are not impacted by the tariffs. We're not exporting to the US. There's no export back and forth in terms of the product that we sell to those customers. And so that's beneficial. Obviously, there's a lot of volatility right now in the markets, just generally. And so having that stable foundation of recurring revenue that is not impacted by tariffs, I think is critical. And if you look at this proposed acquisition as well, all of the power is sold within the United States. There's no cross-border power sales, at least by the project. And so, I think beneficial in terms of for a company of our size and market cap to be able to say, look, I think we're going to be able to weather this quite well. In fact, there might be some opportunities for some potentially under the radar / distressed assets out there from within the renewable space. So the more interesting thing is, I think, around supply chain, right? What is going to happen with the global supply chain, not just for renewables, but with respect to all sort of industrial development and construction. And I know that, historically, we've taken a pretty close look at sort of where components are sourced. And, for us, maybe you want to jump in here, Steve. I think we're pretty safe right now. Costs definitely could be going up, but that's a bit of an unknown right now. But in terms of access to supply and the supply chain, maybe that's something you want to jump in on, Steve, because I think there's quite a bit of flexibility that maybe people don't realize in the renewable space right now.
Yeah, and I think the bit that's probably, I don't know if it's necessarily lost on people, but the bit to remember, I think more the way to put it in terms of the renewable sector in, I'd say particularly the US, but also, Mexico as well, and Canada, they're big enough markets that, the renewable kind of supply chain, I wouldn't say has moved fully into those markets, but it's already well established. Like I had a quick look because, I obviously knew we had this on today. So I had a quick look at the Vestas, Vestas, the largest wind turbine supplier in the world. If you go onto their website and you have a look at their supply chain in North America, they have 2 manufacturing facilities, blades and the cells. They've been there for years. I think they had a big announcement in 2023 around the new factory to develop turbines. They spent something like 1.7 billion on specifically on US downstream supply chain last year alone. And that's just Vestas. For sure, there will be some components that will come that they will import and whatever else, but they're big enough markets that it makes sense for the OEMs to actually go and establish manufacturing bases in country. And I think under the previous US administration, where you had the Inflation Reduction Act doing a few different things, obviously around tax credits for specific projects, but it also had a huge investment plan around actual supply chain of everything from, batteries to various other different renewable technologies. So that whole shift has actually probably been underway for, I don't know, 5-6 years. So I'd say it's not fully insulated for sure, but, it's definitely a lot more well established than maybe some other industries, which, may have a harder time kind of adapting to tariffs. And everything we've done over the last kind of couple of years, when we look at, either, RFPs and we're producing kind of pricing proposals for PPAs, whatever else, you're always looking at that domestic supply chain element of it, because, again, under the current tax credits, which are still available, there was a domestic content bonus which you got as a project to source locally. So these are things which already have been in our mind for a number of years. But for sure, it's going to be interesting to see how the industry reacts and, what happens in terms of costs and everything else. But, from our perspective, we look at the cost structure of a project as we're getting closer to that ready to build and as we're getting closer to contracting with someone. So you kind of are de-risking any cost inflation anyway, because you're pricing it into either your long-term PPA that you're trying to negotiate with a utility. And obviously it won't be specific to any projects we develop, it'll be an industry-wide thing.
Yeah.
But, you know, the more manufacturing that comes back into the US and Canada around all of this is only going to help, I think, companies like us and projects like ours.
Well, the more manufacturing that comes back as well, then will create more demand for electricity, which is sort of a self-feeding cycle.
Exactly.
Absolutely.
Yeah, exactly. Yeah. Yeah, I think that's the big thing to remember as well. Like, you know, there's a lot of talk about renewables and under the current US administration, I'd say, but you know, fundamentally, what is renewables doing? It's providing, you know, low cost domestic energy, which powers a lot of that manufacturing, a lot of that AI, a lot of those things that they're trying to encourage to come back. So they kind of go hand in hand. It's not a case of you can have one without the other. You know, they very much are kind of interlinked and integrated. You know, and I think you will start to see further expansion of the supply chain and, you know, across all those three countries that we operate in.
Yeah. All right. And who knows what next week will look like as well. So we're not, we haven't.
Who knows what the next hour is going to say.
Yeah,
exactly. No comments or predictions on that.
Yeah. Okay. And you gave some expectations and milestones of milestones you expect to hit in the next, say, 12 months or so. Can you just go over those so people get a refresher of what to expect in those de-risking / value creation events are on the horizon?
Yeah, absolutely. I mean, if you look at the remainder of 2025, it's an extremely busy year for us. You know, people talk about inflection points and things like that. Like we've passed it in terms of the project development portfolio for us right now. Like we are executing, and this is, you know, it comes back to the broader point about sort of the investment opportunity. But you look at the projects that we have underway right now and the milestones that we're going to be hitting in 2025. The Alberta project, will be filing that with the Alberta Utilities Commission, the key permit for that project. We anticipate, if all goes well, receiving that permit this year and then being ready to build by the end of the year. So that is extremely exciting for us. The projects in Mexico, they're in further interconnection studies right now. L24 is the anglicized name of the project. El 24, I think is I'll go for it. You know, in terms of my Spanish. And Presa Nueva, those two projects, over 500 megawatts. Updated interconnection processes on both of those that they're in right now. So we should see milestones being hit on that. And that really then triggers a lot of the further development work that will occur on those projects. The initial interconnection studies are being carried out on a project in Saskatchewan. So we have other projects in Canada as well, an earlier stage proposed 100 megawatt project in Saskatchewan. So we'll see some more news on that as it makes its way through that process. On the distributed generation side, we didn't talk a lot about it, but these are the small, usually rooftop solar projects that we have operating in Mexico that are part of our recurring revenue stream. We continually add projects to that portfolio. And I think we're starting to see some efficiencies now in our sales and execution process to get those up and running. So we'll definitely see some expansion there, not just within Mexico, but we're assessing some other markets. It's fair to say that, you know, Canada and the US are both interesting for us from a distributed generation point of view. There's a lot of opportunities. So stay tuned for some news on that. And then, of course, the two large projects, the battery storage project in the US and the Primus wind project in the US. Again, both of those with their interconnection agreements in place as it stands right now. We'll advance discussions on power purchase agreements and offtake and final permitting to advance those. So if you look at all the milestones and the things that we're gonna complete over the course of this year, it's a pretty exciting time. And then you throw in this acquisition, you throw in potential other acquisitions because we're kind of always in the market. There's going to be a lot of news flow over the remainder of this year. And quite a few different milestones that we're looking to hit. So very positive things ahead from our perspective.
Excellent. All right. I think we kind of covered everything. Thank you very much. And any final words?
No, thanks a lot.
All right. Great having you here, guys. Appreciate the update. And obviously you've been busy, and we're going to see a lot of news coming out of Revolve over the next 12 months. Thank you.